Hello, and welcome to NYSE Investment. This analysis is for Newmont on the New York Stock Exchange as of 31st of July 2026, with a share price of $93.75. The full report is on NYSE.ca. The await at $93.75 on the short term. The tape hasn't confirmed an entry yet, but a cheap, high-quality gold major whose medium call is buy and long call is strong buy. Wait for a confirming entry now. Accumulate for the medium and long run. Newmont is the world's largest gold producer, headquartered in Denver, Colorado, and listed on the New York Stock Exchange. It mines and sells roughly 5.3 million ounces of gold a year, plus copper, silver, and zinc byproducts, from a portfolio of large, long-life, low-to-mid-cost mines across the Americas, Africa, and Australia, a base it deepened with its 2023 acquisition of Newcrest. Its edge is scale and asset quality rather than growth. Think of it as the blue-chip, index-heavyweight way to own gold mining cash flow and capital returns. On the fundamentals, this is a cheap, well-run gold business, quality scores 76 and valuation 80, genuinely attractive. Newmont mines gold at an all-in cost near $1,680 an ounce against a spot price near $4,060, a margin of roughly 59% on every ounce. It trades at about 12 times clean earnings and 6.6 times cash flow, on a free cash flow yield near 9%, and the consensus analyst target sits about 51% above today's price. Behind it is a durable structural bid, central bank buying, de-dollarization, and a supportive stagflation-light regime, which our economic alignment red scores 72. That combination is why the medium call is a buy, and the long call a strong buy. A gold miner is a geared bet on the gold price, so we read the metal's trend, not just its level. Gold is high in absolute terms, but it's correcting, below a falling 50-day average and about 10% off its spring peak. The stock echoes that. At $93.75, it sits below its own 50-day line near $99 in a downtrend that is basing but unconfirmed. Timing scores just 45. That's why the short-term signal is wait. We don't chase the miner while the metal is rolling over. The trigger is a 50-day reclaim on volume or a confirmed higher-low holding $88.75. The risks here are real and we weight them equally. First, the gold price, magnified by the miner's leverage. If a hawkish real rate spike or a growth scare breaks gold below $3,500, Newmont falls harder than the metal. The bear case is $76, well below today's $93.75, with the stop at $88. Second, execution. Q2 carried a revenue miss and an operational wobble from an earthquake near one asset, and integrating Newcrest is ongoing. Third, cost inflation. Newmont's all-in cost is only mid-pack behind lower-cost Agnico, so a rising cost curve would squeeze the margin. Set against that, a fortress balance sheet, a cheap valuation and a durable demand story, which is why the medium and long calls stay buys. Now weigh the risk against the reward. The bull case is roughly 83% above today, the base case the most likely about 43%, and the bear case a fall of about 19%, so you are risking about 19 to make 83. So, our call on Newmont, on the New York Stock Exchange, wait. Remember, this is for education, not financial advice. Always do your own research. This analysis is by NYSE Investment at nyse.ca. The link to the full report is in the notes below. Have a great day.